Hello, this is Julius from Basic Financials. I'm going to do a little video today on capital gains when you sell a residential property. I think I might have done something similar to an extent on this, or mentioned it in the past within other videos. I'm going to just concentrate purely on the basics of selling a residential property and what reliefs there are against your capital gain. Or potentially are anyway. So let's give you an example. Let's say you bought a residential property, say 10 years ago, and you bought it for £150,000. And let's say we're now 10 years later and you want to sell it, and you're going to sell it for £250,000. You've made a nice gain there of £100,000. So first of all, that is your gain. £100,000. Doesn't matter, forget about whether you used a mortgage and whether you paid mortgages back. You just need to look at what the cost was, what you sold it for, and the difference is your gain. And the rates at the moment, we've just had the budget and nothing changed. So this is 2021, we're in March 2021, we just had the budget at the beginning of the month. And nothing changed at the moment anyway on the rates of capital gains for selling residential property. Now that is, to the extent that your gain keeps you within the basic rate, which obviously with £100,000 gain it's not all going to be in there, but to the extent that it is, then you're taxed at 18%. To the extent that it takes you over the basic rate, so income of more than about 50,000, then you're taxed at 28% on the gain. So if you're already a higher rate taxpayer, then you would have a gain of £100,000 taxed at 28%. Now, that's the starting point. There are a few reliefs that you can have. First of all, the main thing, I suppose, is if it was your home for some period of time, so say you bought that house 10 years ago and you lived in it for, let's say you lived in it for 5 years, to make the sums easy. The fact that you have lived in it at some point, actually, that won't make the sums easy. Let's say you've lived in it for 4 years and 3 months. You'll see why in a minute. So let's say you've lived in it for 4 years and 3 months, and then you rented it out. Now, the fact that you've lived in that house for some time, it was your private residence at that time, you get private residence relief. Something used to be called principal private residence relief, but that's changed. It's now called private residence relief, where it's basically the same thing. Now, that means that when you sell your home, you don't pay capital gains tax on your home. And if you've been had a home that's been yours as a home for a period of time, you don't pay capital gains tax for the period that you had it as your home, which is fair enough, because if you had a home for 20 years and you rented it in the last 6 months, it wouldn't be really right to be paying tax on the whole lot, would it? So you'd get most of it free from capital gains tax. Now, in our example, if it's been your home at some point, you get that period, but you also get the last 9 months. It used to be 36 months and then it reduced to 18 months, but now it's 9 months. There are some complicated circumstances, well, not complicated, but specific circumstances where it might be longer than that, but just take it as 9 months. So in our example, you'd get that 4 years and 3 months as principal private residence or private residence relief, plus the 9 months, so 5 years. That's why it makes it simple, because you'd have half of your gain, i.e. 5 years out of the 10 that you've owned it, you'd have as private residence relief. So in our example, rather than £100,000 being taxed, you'd only have £50,000 taxed, which is that's a useful relief. Now, there used to be something called letting relief, but really that's changed quite substantially. It used to be quite handy because it would be an extra substantial amount that you could get as relief, but a year or two ago it became much stricter, and you only get letting relief when you've had somebody letting at the same time that you've lived in the private residence. So say you've been in the private residence and you've had a section of your house which has isolated, effectively, rented out to somebody else, the fact that you've been in there means that you could get letting relief. But in our example, it's going to be unlikely, because if you've been in there, then it would be a principal private residence, so you get private residence relief anyway, so it's not really applicable anymore. If you have a lodger, if you just have somebody lodging with you, then that doesn't count as letting, so you don't need to worry about that. If it's your home and you've just got a lodger in there, then that's your home and you're still entitled to private residence relief. It's only if you've let out, say, a section of your home that you then are potentially subject to capital gains tax on that side. So if you let out half your home, then you get half of it for private residence relief and half of it isn't subject to it. So you need to bear that in mind. But if you've just got someone lodging, that doesn't matter. So now the other thing, so you've got the annual capital gains tax exemption is another one. That's £12,300 for last year and for the next 5 years, because they've frozen it unless rules change between now and 5 years' time. That was part of the budget. They freeze that annual capital gains tax allowance, and if you don't use it, you lose it. So you can't carry it forward. So, and also, watch, if you're selling this property, if you had any other capital gains and used your allowance, then you'd have to take that into account. But assume you had nothing else, you would be able to take £12,300. Now there's a potential saving here where if you're married, you could transfer part of the property to your spouse and before sale, and then you could have, and there would be no capital gain on that if it's between spouses. And then you'd have 2 lots of annual capital gains tax allowance that you could use. Obviously you'd have some solicitors' costs maybe in getting the transfer done, but yeah, that's another potential saving. So you've got your annual capital gains tax allowance, you've got your private residence relief, and letting relief probably doesn't really apply anymore to you. Remember that last 9 months at the end is going to count as part of your principal private residence if you have at some point had it as your private residence. Some people might move into a property in the last year or so they can get a bit of extra time if they've had a property they've rented out. What else? Remember, when you buy a rental property, when you paid stamp duty on it, that forms part of the cost of the property, as does the legal fees and things like that. So that's part of the cost. And when you sell, if you have got estate agents' fees and legal fees, that would come off your sale price. So those are quite useful as well to remember. The gain is not quite as straightforward as sale price minus cost. It's the sale price minus estate agents' fees and legal fees, and the cost is the cost plus stamp duty and legal fees. So I think that's probably enough on that. If you've got any questions or comments, please leave them in the space below as usual, and if you could like and subscribe, that would be great, and I'll see you again for another video soon. Thanks for listening.